Good afternoon. Hello. It's now October the 29th, a Tuesday, about 5 p.m. Central Standard Time here in Manitoba, Canada. And we're going to do an epic technical analysis on Bitcoin today. For those that are not caught up with my tweets and my YouTube videos, make sure you're catching up. The accuracy rate has been incredibly high lately, and all that I want is to share what I know and to share my opinion on what's going on in the market, as long as you guys take with a grain of salt, all right? Like I always mention, if you're going to be reading only one source of news, you might have a very biased opinion. But if you are reading it from 10 different sources of newspapers, then you might have a completely different opinion where you can start to formulate your own. So make sure that you guys are always taking things with a grain of salt, and always remember that the most important decisions are always your own to make. So yesterday we concluded with a pretty detailed technical analysis which reviewed an Elliott wave count in very high detail, and it rationalized both the bullish and the bearish view. I highly recommend that you take a look at it if you haven't already. And I apologize, by the way, for my face being incredibly bright. The sun, it faces this way when it starts to set, and that's exactly what I wanted, to get a lot of that vitamin D, especially if you're working from home. Notice how bright it is. You can barely see me, but this is a very conducive atmosphere to be trading over the Christmas holidays. So once again, make sure you're reading this, watching this technical analysis video. Always catch up with me. So today we're going to go over in high detail some specific topics, and one of the specific topics is going to be the roadmap to roughly $13.8 thousand, okay? And how are we going to be doing this? This is a very critical number in my opinion, because we want to reach this 13 to 14k resistance one more time. This way it will allow us to have a chance to hammer at it until we eventually break it. So let's talk about why this is incredibly relevant first of all, okay? So first of all, the reason why it is very relevant is because whenever we come, okay, first of all, let's back up. Let's talk about Fibonacci retracement, add a little bit of an educational mix into this right here. So whenever you do a Fibonacci range and you want to see how much it is retracing to, you start off, okay? If it goes from a rally from low to high, then you would start off your Fibonacci retracement, click there, drag it all the way up to there, and then that's where it would go. So the one line would be here, and the zero line would be up there. That's the best way to do it, right? It's pretty basic. And here I remove some of my lines because they're not always necessary, but you can keep them on here if you want, okay? So the reason why this right here is an incredibly important number is because of this, okay? What people have failed to realize, that the reason why we actually found support, one of the big reasons why we found support, okay, at this specific region as well, is because if you take the Fibonacci range from where the rally began, we're talking like last year, you know, 2016, all the way at like $350, and you go to the high range right here, okay? You go to the high range right there, and don't forget for a moment that this right here is the golden pocket zone. And what did we just do right now? We caught it in the golden pocket. Very significant, isn't it? Yes, I would say it is. Okay, now let me explain something to you as well when it comes to impulse waves and how they're generally targeted. So we're gonna go over some basic rules for Elliott wave theory, and I apologize if this is redundant. For the people that know these basic rules, you can gladly fast forward them, but for the people that don't know them, you might find this incredibly helpful, okay? So we're gonna do a very basic lesson on impulse waves going up, and also with Fibonacci extensions, okay? So this is a typical zigzag impulse wave going to the upside, okay? Now, we like to target specific things, and we're not going to go over the importance of Fibonacci extensions and Fibonacci retracement and just Fibonacci numbers in general, but they're generally things that are found everywhere in the universe, as we know. It's a mathematical sequence, it's a set of sequences, or it's a sequence of numbers that's just magically not magically, but mathematically found everywhere in the world, like I always mention, from the way things are shaped, to the way things are coiled, to the way our genes are found, to the way buildings are designed, you know, to the way waves and ripples form. It's pretty cool. To the way even plants grow their buds. It's pretty cool. To the way leaves and snow shape or snowflakes even form. They're all found in this amazing set of ratios, right? The golden ratio, and a very important number for us to like to target is, of course, the 1618, right? Extension. So whenever we have, for example, a wave 1 that goes upwards and a wave 2 that comes down, okay, generally speaking, what we always say is that the next wave 3, is often the longest and never the shortest. So which means that wave 3 can be shorter than wave 5 as long as wave 3 is longer than wave 1, and vice versa, where wave 3 can be shorter than wave 1 but has to be longer than wave 5. And a very easy scenario for me to give you where the latter can fall into play is this, called a leading first wave diagonal, which happens often. So the first wave is the longest, second wave, right, is the shortest, or it's this correction wave, third wave is not the longest, right, and then the fourth wave correction, and then the fifth wave is actually the shortest, right? So long as the third wave is not the shortest, as long as it's either longer than wave 5 or longer than wave 1, then it would fit that criteria, right? And what we generally like to say, okay, let's say if it was a zigzag, okay, let's just say it's a zigzag for simplicity's sake. So what I would do after wave 1 and 2 is formed is simply doing this. I would take my Fibonacci extension from here to there and there. So once again, this is my first click, that's my second click, that's my third click right there, or along that same axis, okay? And then what I would like to do is assume that wave 3 is often the longest and never the shortest, which automatically implies that it would normally be the longest, right? If it was a beautiful impulse wave going to the upside. And of course, a normal target would be specifically the 1618 ratio. Okay? That is a normal target. But generally speaking, for it to be a normal zigzag where wave 3 is often the longest and never the shortest, what we'll say is that it will fall between a region of a 121 extension or a 1618 extension. Beautiful thing, right? Alright, so next theory is this as well, okay? The next theory is that when we can call that corollary A, okay? This is going to be corollary B. That's going to be supporting, I guess, proofs that can back up my main proof. You can say that. I'm sorry, I'm just looking at my neighbors. We're starting to clear out a lot of snow. It's beautiful outside. It's snowing pretty hard out right now. Alright, so now we all know the golden ratio. Okay, we all know the golden ratio to enter on a large degree. Heck, you'd be silly if you're not looking for this target, right? In fact, I believe that over time, if you constantly look for a large degree retracement to 618 and only take those trades, whether it be only 4 or 5 trades a year, you're most likely going to be profitable over time. That's just my opinion based on my own statistics of what I've gathered and back tested. So of course you're going to want to enter around there or accumulate a little bit, right? And then you're going to buy whatever your strategy is and what you prefer, perhaps on a breakout up there as well, okay? So that's one way to look at it, going to the upside in a rally. Now there's also a rally to the downside where we're falling down, okay? Now that we have a bounce up inevitably. So we take a retracement from the other side where we started from the top to the bottom, and the opposite holds true as well, where if bulls are entering the market, okay, if bulls are entering the market at 618 Fibonacci retracement right here, okay, bulls are entering to go long right here, okay, they're going to go long as in red on the bottom for their stop loss, okay, And then bears are entering it on the opposite, where the red is now on the top because they're shorting it, right? So do you see what I'm saying? Just like that, right? So it's safe to say, once again, that if the bulls are entering it at the 0618 Fibonacci region, going to the upside when there's a bull rally upwards, then the opposite applies as well, where if you are in a bear market and you're coming to the downside on the bounce to the upside, bears will also enter it at the golden ratio. The complete opposite applies. It's irrefutable, this fact. Okay, so what I want to be clear about now is that when we retrace down from here to there, that's clearly a bear market, right? Now the question is, have we actually reversed at this specific moment right there? Because there are a lot of confluent reasons to make us wonder if this is actually the end of the bear market. One major reason is this right here as well, okay? One major reason is that we are trending very much so near the golden pocket range right here when we take it from the overall structure from the low side of about 300 all the way to the all-time high ATH. Okay, that's the golden ratio. 2, pretty darn good volume, exactly where we are right now. Okay, these are some major reasons in my opinion. So now let me talk about this resistance right here. Okay, right here is a major target because this ended up becoming where we thought bears could have entered the market. The bears entered the market where we came down here. They obviously took some profit here and they re-entered at the golden ratio zone right here. Okay, so now what we want to do eventually is make another hammer attempt up here. We want to keep hammering at it so eventually it goes to the upside, because now this golden ratio is very powerful, where we ended up having a lot of shorts enter it, where we dropped from 11,400 to half. That's a pretty big drop in my opinion. Okay, so I'm really itchy right now. I'm sorry, I was like cooking today and I was like allergic to something slightly, I think. Okay, anyways, let's get back to this. So now we want to get to up there, regardless of where we land. We want to get to up there again. And how the heck are we going to do this? This is very critical in my personal opinion. Okay, now in my opinion, this is crucial. So let's just say, regardless of, let's just go to a 1 hour chart right now. Okay, now we're going to take the Fibonacci retracement of this specific structure only. And we're also going to say on the worst possible side, first of all, I want to establish that this section right here, we broke it with flying colors, and I really doubt that we're going to fall back to completely below it unless this is just a catastrophic type of failure. Okay, now let me give you, like, that's pretty strong support that's been established for how long now? You know, for 24 days we can say. So we broke out of it, and also talking about the golden ratio rule of people wanting to accumulate in here. So let's just say we actually ended up dropping where we make our waves 1 and then we make our waves 2 and ignore time. You guys all know that I don't ever factor in time or do time analysis. So now let's just say that we ended up correcting down here where this is now wave 1. Okay, and now this is wave 2 right here. This is going to give you guys shivers. Okay, you need to understand, first of all, the importance of getting to almost 14K. The importance of that is that we are now going to challenge officially the 0618 Fibonacci region again, which means that if we challenged it twice, there might be a third time, there might be a fourth time, there might be a fifth time, and we might actually break above it. So the moment that we break above this key resistance, in my mind, is the moment that we can be very, very bullish. Now watch this, okay? Just based on a simple Fibonacci retracement, or sorry, extension, this is what could happen. If this originally is an impulse wave going to the upside, then where the heck is wave 3 going to be? Is it even possible for a wave 3 to propel to that region right here? Now, without further ado, we're going to take our Fibonacci extension tool right there, start from where the origin of wave 1 began, go all the way up here to the end of wave 1, and then go down here to where wave 2 could possibly be at the 618 Fibonacci region. I want to double click on this to make sure the 1618 is shown there and the 1-to-1. And what do we get? This is what we get, ladies and gentlemen. We get a 1618 extension at $13,700, yielding us exactly to where we need to be. If this were an impulse wave going to the upside. That's right, guys. It took me a long time to do this technical analysis, but I think that's one of those moments where, you know, if it's funny enough, like if it's just kind of funny, you just say to your buddy, you're like, yo, what's up? That was pretty good, you know? Not bad. Just shake hands. If it's all right, it's like, yeah, that was a good one. You know, you just, yeah, that was a good joke. Bump hands like that, right? But sometimes it's so funny, you know? So funny that you just gotta slap yourself in the shoulder. It's like, so funny. Or sometimes it's so good, it's a knee slapper moment. Do you guys know that? Knee slapper. Do you guys know what I'm talking about? You guys have seen those people, right? That is the progression that I call of what do you call it? Of giving props to yourself. And this right here of the 1-to-1 extension or 1618 extension was a knee slapper kind of moment. No, I'm just joking around, guys, by the way, okay? I'm just joking around. So yeah, I think that this is pretty cool. If this does make a wave 3, amazing. Now, for all we know, okay, we're just gonna end up getting slightly higher than the wave 1. You never know, right? And then we'll just retrace back down to over here, and then we actually end up getting the 5th wave that ends up getting to that one over there, and then we get a huge correction with an ABC to the downside. Okay, so this is just a very simple roadmap of how we can actually get to $14,000. Now, how does this hold true? Well, this simply holds true by breaking out of here soon and holding well above 8,400. Okay, if we hold above 8,400, we're going to be on track to do 13.8k. I think that if we hold above 8.9k, we'll smash 13.8k and probably go for the higher 14s. Okay, that's the bullish side. The bearish side is simple as this: 8,900 key support level of mine. Why? Because that's where this wave A ended up dipping right here. Okay, and then if it doesn't hold the bearish side, we're gonna fall well below 8,400 and we're gonna be testing 8k again. But for now, it seems like we're getting some incredible bull defense right now. As you can see here on, for example, Bitfinex, it ended up dropping $338. 10 minutes later, it ended up surging back up a whopping $420. So we can see right now that there's a lot of resistance from the bulls to go down. That makes sense, right? The bears want to push it down, but the bulls are fighting them pretty hard right now, and they're like, no, we're not letting you do this. So I hope you guys enjoyed today's technical analysis, and these are my thoughts, once again, offering you both the bearish and the bullish run, or versions of both of them. Hope you guys have had a fantastic day, and I hope to see a lot more of you in the future. And if you guys love these videos that I'm putting out, let me know always, guys, and just give me a thumbs up. Feedback is incredibly important. So have yourselves a great day. And if you guys are still interested in my course, there's only 2 days left, and you guys know that I love to hook up people in the last 2 days of the month if you guys are struggling to get it. So let me know if you're interested in it by crypto or through Udemy. And if you guys are interested in the t-shirts as well, as you guys know about, let me know. I'm going to be rocking mine all day. I got a bunch of mine in already. So have yourselves a great one. Take care. Bye now.